whether you're trading Forex or crypto or stocks. I've been trading Forex for almost a decade now, and I've added crypto and stocks over the course of that period of time, and I've made millions of dollars in Forex and crypto and stocks. And the kinds of things that I see people focus on is very telling. For the past nearly a decade, I see people doing so many things that do not matter at the cost of things that really do matter. What I'm going to do here in this video is calibrate your expectations. Because if you do not have the proper expectations going into this, I promise that you will not become successful in trading. You are not growing a $100 account to $10,000, let alone $100,000, let alone $1 million. That's just the truth. Anybody else saying that is probably not being truthful. I'm not going to say that no one's ever done it, but if you're expecting that those are the kinds of results that's possible or anywhere near reasonable, you're in the wrong mindset. So I'm going to show you in this video how to keep things really, really simple, how to control risk, and how to start today approaching trading in a way that's actually conducive to you getting and staying profitable. So I'm going to show you the way that I trade. I'm going to start with a trade that I called this morning here in my group. There's a link in the description if you want to join this Discord server. It's just where I call all my trades. I've made $31,000 today trading Forex. And the past few weeks trading Forex, I've made about $170,000. If you count in crypto, I've made over $300,000 to $400,000 just this month alone. But let's start real simple here. At 7:30 a.m. this morning, I posted a trade. I said I'm short on GBP Canadian dollar, and I'm risking $20,000 on it. This is how I call trades in my group. I just show the entry, the terminal, the screenshot, and everything. And you can see right here, I just have black and white charts. I don't use different candle colors. I don't use crazy backgrounds or any indicators or anything at all. All I do is I use black charts with white candles, and I use support and resistance zones, and that's it. So I took this trade because price came to a resistance zone on the higher time frames. I use the 4-hour, the daily. Sometimes I'll glance at the weekly like you see here. And I'll just sell at resistance and I'll buy at support. And I'll put a stop loss just past the zone. And I'll put a target of usually at least a 1-to-1 risk reward ratio. And then what I'll do is if I feel that the trade has the potential to move a bit further, sometimes I'll extend it to a 1 to 1.5 or a 1-to-2 risk to reward ratio. But I called this trade here. Then price started going into profit. And when it came into profit down to this next little support level, I ended up just closing this trade early. So it represented about $12,000 of profit. The other trades that I've taken were GBP JPY last week on Friday. That hit the profit target yesterday for a $20,000 profit. I was in a GBP Canadian dollar trade from last week that I closed at break even. And then I re-entered that GBP CAD trade this morning with a new risk structure and made $12,000. So $31,000 today. Live trading, just calling the trades out. So here's exactly what I do. Whenever I'm trading, I start on the daily time frame. And what you'll find is on the daily time frame, you'll have price going around, bouncing up and down. Sometimes it's in a trend, sometimes it's not. And all I do is I just look at where the current market price is on the daily. And then I ask myself, where's the most clear resistance zone above price and the most clear support zone below price? And then I just draw those two levels on the chart. So in this case, something like this. I ignore levels that don't look clear and that don't look obvious. And then I only trade off levels that I think are very clear and are very obvious. It's not complicated. Then what I'll do is I'll set two alerts. One alert I'll set will be at the resistance zones above price, and the other alert I'll set is at the support zone below price. And then if price gets into the resistance zone, what I will do is I will sell at that resistance zone with a stop above the zone and a target somewhere below it. And then if price gets into the support zone that's below price, I will buy at that support zone with a stop loss below that support zone and a target above. Now, the cool part about doing this with 1-to-1 risk reward ratios when you start is that you're not really going to have a lot of the crazy win streaks that you see a lot of other people have by trying to target a 1-to-5, 1-to-10 or more risk to reward ratio. When you do things like that, it becomes very, very hard to maintain any sort of feasible level of statistical proficiency. I see so many people get wrecked just trying to target too far. Better to risk more money on a high quality trade and risk a lot of money on that trade than to take a lot of trades where you're risking a smaller dollar amount, where the statistical likelihood of you getting stopped out at your stop loss is much higher. In some cases, 60, 70, 80%. What I do here is I barely have a win rate of 50%. And if price starts going sideways or going against me, I just get out of the trade. Sometimes it hits the stop loss. Sometimes I close halfway to the stop loss. And sometimes, like last night on GBP CAD, I just close at break even. So that means that my losses are always controlled and they're always relatively small. And whenever I do have a winner, it generally goes all the way to the profit target. And in some cases, like today on GBP CAD, I close that before the profit target because of the context. You're going to get this with experience. So all that matters is that you get that experience in a very simplified way, so that you can use it as a part of your intuition, your trade selection, your wisdom to be able to make the appropriate decisions depending on whatever the context is. I want to point out that you're not going to get around this. You will have to get experience in trading to be able to do it proficiently. You will have to see the same things happen over and over on the chart every day for weeks and months and years before you'll have any type of reasonable level of discretion which you can then use to apply to your trading decisions. No other approach is ever going to work. There's no such thing as a black and white trading strategy, because you as a human who are implementing that trading strategy are the ones using your subjective discernment of what the criteria is and then seeing if that tracks on to whatever market environment or whatever particular setup it is to then try to trade it. There's so much subjectivity involved that it is intellectually dishonest to say that there's anything you can do that is black and white and ultra systematic that is ever going to make you a profit. Now, sure, you can put some simple criteria in place, but you're still going to have to use your own personal subjective judgment. So consider yourself getting experience here over the next few months after watching this video as a treat. Because with a 1-to-1 risk-reward ratio, half the time it'll hit your stop loss and the other half the time it'll hit your profit target. And you can learn how to start cutting your losses a little bit early, and you can learn to start holding your winning trades to the profit target most of the time. So this is exactly what I did on GBP CAD. I'm going to go ahead and remove these drawings and I'll show you. Last night, I drew a resistance zone right here because price was right there at that previous candle, and this was the current daily candle that price hit the profit target with. And now, since the Asian session changeover just happened, it's 7:30 p.m. here in Texas. That was 3.5 hours ago. What happens is the price now has a new candle open right here. So what did I do? I had an alert here at this resistance zone, and when price went there, it triggered my alert. And whenever it triggered my alert, I then went to this pair. I entered a sell. I put a stop loss just above the zone, and I put a target of a 1-to-1 risk to reward ratio. Now, of course, the criteria looked a little bit different than this, but again, I've already showed it to you. It was just this right here. An entry at the zone, a stop loss above the zone, and a target at a 1-to-1 risk-reward ratio. And instead of risking $100 or $500 or $1,000, I risked $20,000. On my trades, depending on the trading opportunity, I'll risk anywhere from $20,000 to sometimes $50,000 per trade. And this one ended up just simply falling into the profit, just like the other past, couple trades that I've taken. So whenever you're just buying at support and selling at resistance, what you can do, let's say you only have like $1,000 to trade with, is you just start your $1,000 account and then risk a dollar amount that you're comfortable losing per trade. If you want to risk $100 per trade, that's fine. Just know that you're going to be taking losing streaks of 3, 4, sometimes 5 consecutive losses in a row, even with a 50% win rate. It's statistically likely to happen over the course of 100 to 200 trades. And so let's say you're comfortable risking only $10 per trade. That's 1% of your account. You're going to risk 1% to make 1%. And it's just a starting point. You don't have to do this for your whole trading journey, right? You can modify and you can adapt things and optimize them over time. But when you're just getting started, just use a 1-to-1 risk-reward ratio and keep it very, very simple. Because if you do those two things, you are, for one, keeping things simple. You have something predictable and consistent that you can do every single time. And number two, you're controlling risk. And that is what will make you or break you as a trader. Your willingness and proficiency at keeping things simple and controlling risk. Everybody that I know who is actually profitable trading any financial market, they keep things so unbelievably simple that you, as a person who might not be profitable yet trading, you would laugh at how simple it is. And yet it works. The simplest solutions are usually the best solutions in life. It's a philosophical principle called Occam's razor. You can go look it up if you like. But it is true that keeping things simple in trading is generally the best way to trade, which is why all I do is just simple support resistance bounces. Believe me, I've tried so many things over the years. This continues to work best. I always continue to evolve right back to the same trading approach. Swing trading basic support resistance levels in the higher time frames. I'm going to show you the GBP-JPY trade that I took yesterday. So I actually took this trade on Friday, but it closed yesterday. So what I did is I had GBP-JPY here on this chart, and then I had this resistance zone marked up in here. And then what I did is when price came up into this resistance zone, I entered a sell when price got up in there to the resistance zone, and then I put a stop loss just above the zone, and then I put a profit target at a 1-to-1 risk-reward ratio. This trade, again, it was called last week on Friday, but you can see that the analysis is always the same thing. You can see right here, this was 6 a.m. on Friday, September 12th. I'm short on GBP-JPY. It's a $20,000 risk, and this is exactly what it looked like. I want you to know that I'm not doing anything magical or anything crazy. Literally all I did was I waited for price to come to a clear resistance zone here on the daily, stop loss above the zone and a target below. And that fell to the profit target and hit the profit target last night. Last night on Sunday at market open, I made like $19,000 after swaps and commissions, just from a very, very simple trading idea. The other reason that I don't target very big profit targets is because you have stuff like this happen all the time, where price goes into profit and then turns around and you have to close it at a loss or break even, or it even hits your stop loss. I just don't play that game because I know that you're very, very lucky if you get a nice little move off of a zone. That first initial move off of the zone is usually the most likely. Holding it any further than that becomes less and less likely that you're ever going to actually have your profit target met. And that's why I don't use huge risk to reward ratios. The win rate is so abysmally low and it just damages a trader's confidence, and it prevents you from starting to see things come to fruition. It prevents you from being able to see all the nuances in the trade progression, and it prevents you from being able to exercise your discretion by getting out of trades a little bit early that look like they might not be working out. If I was still in this trade right now and my stop loss had already been hit, I'd probably be closing this trade now, just because if you get into a short at a resistance zone and price goes down, but then it fails to keep moving and now it starts going up and making higher lows and higher highs, generally those will continue past the zone and hit your original stop loss. So that's why my stops are not pinpoint tight just above the zone, but they're also not crazy far above the zone either. I put them at a logical area to just say, you know what, if price breaks this zone, I'm going to close it at a loss. And then I close it based on whatever the context is. So I sold here at this resistance that fell into the profit target, and since my profit target wasn't a mile away from the zone, it ended up just popping right back up and going back into the zone, but my profit target was already hit and I was out. I'm going to show you some more trades that I'm looking at this week. On GBP AUD right now, you can see that I've just looked at current market price and I've drawn a zone above and a zone below. Now, I currently don't see any zone below price. The only zone we really have to work with is something like that, but there's only like 2 little data points right here, so I'm not quite sure it would be the most responsible thing to trade off of. It's just a thing based on discretion and intuition, but it still nonetheless is a zone, and if I really wanted to, price could come down here and I could buy at that support. So what I'm looking for right now is for price to come back and test this zone that it just broke. It broke below this little support zone where we had some nice, very obvious cleared bounces here on the daily chart. And then once it broke below this zone, we've now come back and we're starting to retest it. So what I'm waiting for is for price to come up deeper into this zone and have a nice deep retest. And then if price does retest this zone right here, I'm simply going to enter a sell with a stop loss just above the zone and a target of at least a 1-to-1 risk reward ratio. And then price is either going to go sideways for a while, and if it does go sideways, I'll just get out of it in a small profit, a small loss, or a break even. Or it'll immediately turn around, go straight to my stop loss, in which case I'll just lose the trade and I'll lose whatever the stop loss was. That's what stop losses are for. They get you out of trades that aren't working, so that way you're not holding it all the way up here and end up blowing your account. And then the third thing that could happen if it's not a break even or a loss is that it just falls right here and then it turns into a nice little break and retest trade. Just a simple break of a support zone, pulls back into resistance, and I just sell at the resistance zone with a stop above and a target below. I'm going to go to GBP NZD next. You can see right here we have a pretty clear resistance zone. Price has respected this zone as resistance every single time except for this huge liquidity spike for a couple of days right here. But aside from that, it's a very clear, obvious zone. So what I'm waiting for is I'm waiting for price to come into this zone, and once it gets all the way down here into this zone, what I will then do is likely, depending on the context, I will enter a buy, and let's just say it's a little bit higher, right, because it starts to bounce. And I'll put a stop loss just underneath the zone, and I'll put a target right here at a 1-to-1. So while you're having so many people try to target this move right here, going all the way up back to the highs and sitting in trades for weeks and sometimes over a month, you can be the person who just waited for a very clean, clear, obvious entry. And then once you get that entry, you can just put your stop loss below the zone, your target at a 1-to-1, and price just needs to have a little tiny move off the zone, right? And sometimes it happens in the matter of just one day, even on the daily chart. You saw this trade that I took up here, this little sell at resistance. I just waited for a good entry, a sell inside the resistance zone, and then I put a stop above and a profit target below. And even with that little tiny move, I was able to make a $20,000 profit. Now, you'll get better at this with time, but it's very important to keep it very, very simple so that way you can see these things play out over and over. You can get a feel for what price action is doing to either close the trade early or hold it. Another one I'm looking at here is CHF JPY. Price has already come into this zone about 2 weeks ago and then hit this zone and then bounced far away. And I don't know if I'll take a sell if price gets into here again, just because it looks like we're going up. That's why context matters. That's why it's important to use your discretion. To me, we've already had bounces here and then another bounce recently. We just came right back up. So I actually think this is more likely to break above. So what I'm waiting for is a break above, then a retest, and then I'll probably look to buy. But even in this case, this particular setup right here, if we use the replay tool, and we go back to here, you can see that this was a very obvious clear resistance zone where price had bounced 4 times. And then when price finally made it up there into the zone, all you had to do as a trader was just pull out your phone or your laptop whenever your alert goes off on TradingView and sell at the resistance zone with a stop loss just above the zone, right? Not too close like that, but not too far either. It doesn't need to be crazy. Just put it right above the resistance zone where if price were to break past it and go all the way there, that would be a trade that's invalidated and a trade that you want to get out of at a loss. So you could have sold right here, stop loss right there, and a profit target at a 1-to-1 just to start the trade off. Look at what happens. The very next day in the same candle, it just goes down and hits the profit target. And while you may have people trying to target really, really extreme targets, trying to grow their account from $100 to $1,000 or $100 to $1 million or something like that, you can be the person that takes these small, consistent trades and consistently makes a profit. Let's say that you start a $1,000 account and you risk about $100 per trade. And you take, say, 30, 40, 50 trades over the course of a month or 2. In that time period, you could get enough profit to be able to double that account. I'm not making the statement here that it's hard to double an account, because if you're controlling risk and you have a very, very simple trading approach, it's not hard to do it. I wouldn't expect you to be able to do it in like a day or a week. But given enough trading opportunities and given controlled risk on each trading opportunity and using your experience and discretion as you get better at trading, being able to double even a $1,000 account using high leverage with these little shady offshore Forex brokers, and being able to do it in a way that's consistent enough where you can grow that $1,000 to $2,000 and then just withdraw it and start over again, that is far more realistic than thinking that you're going to grow a $100 account to a $1 million account over the course of like a month or 2. It's just nowhere near viable. By doing it this way instead, You can have a very high chance of actually being able to make any amount of money at all, or you can have a virtually 0% chance of ever getting profitable trading if your expectations are that you can make a whole lot of money with a small amount of money. That's just not the case with anything in life. And trading Forex and stocks and crypto is no exception. So if you're keeping things real simple like this, you can also start increasing your risk per trade once you get a little bit better and a little bit more confident. You can wait for price to come to areas where you think it's very likely to bounce. And when price does get to those areas, you can sell when price gets in there. You can put your stop loss just above. But now instead of risking $100, you could start risking $200. And you can increase it to $300 and then $400 and $500 and maybe even $1,000. Or maybe even you can start risking like me, which is like, $20, $30, $40, $50,000 per trade, because it's just all a numbers game. I used to not even make this much money in an entire year when I first started trading when I was 21, almost 10 years ago. This year I just turned 30, and we're already a good chunk of the way through the year. We're coming on 9.5 years that I've been trading. And then in March of this next year will be the 10-year mark, since I started trading in March of 2016. March of 2026 will be the 10-year mark. And I'm still keeping things simple, and I'm still controlling risk. My vote for you is that you will keep things simple and you will control risk. Because if you literally just do this, this is all you need to do. Nothing fancy, no magic tricks, no mental gymnastics, and no crazy promises. If you just do these very simple things that I've just shown you here in this video, all you have to do is just start scaling up your risk per trade once you get proficient. And then trading becomes something that's very simple, it becomes something that's very realistic, it becomes something that is very, very viable for you to actually do in a profitable way long term. So that's all I have for you in this video. If you want help doing this and you want to follow my trades live to be able to start learning how to structure these zones and take simple support resistance trades, I'll put that link in the first link in the description of this video. You can check it out. You can follow all my trades in here. I sometimes have days like this where it's like, $27,000 profit day. I have days where I lose, days where I win. This was a day where I made $46,000 right there on that day so far. Days like this where I made $68,000. This was in one trading opportunity. It was a sell on AUDJPY. And I'll finish this video by showing you how simple that trade was. Look at this. AUDJPY on the daily chart. All I did, I'm going to rewind it back to where price was at that time where I took this trade. So this was on September 5th. When was this? September 9th. So this was September 9th is when I hit the profit target. So it was further up here. So yeah, September 9th. All I did was when price got here into this resistance zone was I entered a sell at the resistance zone. I put my stop loss above the zone. And I have my profit target at a 1-to-1 risk reward ratio. So what happened here? I'm going to show you exactly what the trade looked like the moment I entered. Got into a sell, added to it, then it fell to the profit target. $68,000 in a day. I'll put a link in the description for this again, and I'll see you in the next one. Cheers.